Good to see you. Good to
Hey,
see you,
Joey.
man. Yeah, man. My apologies, man. David Simpson was supposed to be joining us tonight, and about 5 minutes ago, about like 1 minute before you got in here, he actually shot me a message. He's like, "I just can't tonight. I'm too drained. Uh, been like a crazy work day for him, I guess. Whatever he's been doing. So my apologies that he's not here tonight. But we do have you tonight. So all to ourselves. So that's I guess a little bit better, man. In that case, Jake, we were taking a look at your post here, the retraction with the nulls. We didn't get a chance to really read through it, but why don't you explain to us? Because you said that there was possibly a mistake in terms of those nulls. Why don't you walk us through that, what you found and what led you to a more bullish scenario in that case?
Yeah, well, thank you for having me yet again. I'm happy to be a part of the show in any capacity. It's all good about Dave. We got lots we can go over.
Of course.
This thread is the source of a great debate that I'm raging on right now. I've got a bit of a so let me give everybody some background and history first.
Sure.
In my original NOL post, I was told that the I had a misunderstanding of shareholders and creditors.
Hmm.
And I oversimplified. I do want to state that for the purpose of that post, I did say creditors, but there is a specific word there that says qualified creditors. I left it out because it didn't have anything to do with what I was trying to get across. But if anybody comes across the word qualified creditor, it means an 18-month window of time that you've held the bonds to be eligible. So in any case, I'm going through it, and so the mistake that I made was starting with reading the bankruptcy code instead of looking at practical examples. And I'll be honest that through Google searching and everything that I've tried searching through the internet, I'm having a hard time actually locating actual bankruptcy cases where there's a substantial amount of information that can tell you either way, whether they utilized nulls or whether they didn't, if it was a Section 382 or whatever. But I did find some scholarly legal articles and some white papers and some information that substantiated that I was wrong about the shareholder and creditor, mostly because you can be a creditor and convert to a shareholder. And when you do that, you satisfy being both, even though you're no longer a creditor, which didn't really make sense to me because then there's shareholders but no creditors.
Right. Yeah.
But the legal interpretation is that satisfies it. Excuse me. So I was wrong there, and so that was the basis of the post today. Now, originally, I wanted to post that yesterday,
Mhm.
but I discovered that warehouse thing that I was very glad I was wrong about because it would have thrown a wrench with the second half of what I wrote about in this retraction post. But I'll get to that in a
Yeah, have
second.
a good night, guys. I gotta go.
All right. See you, Blair.
Sorry.
Have a good night, man.
Late. Night,
Let's
Jake.
get some love
Hey,
in the
see you,
chat
Everybody
for
Blair.
else.
See
Blair.
you, buddy.
All right. Take care.
So that's what I just wanted to communicate was that the requirement for shareholders and creditors I had misunderstood, and I wanted to get it out there.
Sure.
But in doing that, I noticed that the continuity test, even though I earlier had read that you can satisfy it through product lines and by carrying the same sorts of items that the old business used to, it actually is not one of the ways that you can satisfy the continuity test. In finding these legal articles, there's only really two ways. Either you maintain the actual business or you maintain the assets. It's very simple. So what I wanted to say in the second half of the post was originally also I should give the perspective that when I wrote the NOL post, the company had planned on keeping the profitable locations and keeping a smaller actual brick and mortar footprint. And it's funny because in doing away from that, and by going, I guess, essentially to the shell company, for lack of a better word, is what I'll call it, they've really made the continuity test very easy. So there's continuity of business and there's continuity of asset. And if you can just scroll down a little bit to where I had that first picture, where I quoted the white paper. Yeah, so there it is right there. So must either continue the historic business or use significant portions of the assets of the old business. The continuity test is very simple. And then if I could, Michael, if I could ask you to go to the second picture, then later on it gives, the third picture. It specifies what the asset continuity test is. And it says right there, the asset continuity test is satisfied if the new loss corporation uses a significant portion of the old loss historic assets in a business. And then that underline says these assets can include stock and securities.
Mm-hmm.
So That's great. And it's funny because I've been having a raging debate all afternoon with folks in the comments saying you can't satisfy the asset continuity if you don't have any assets, but they're just not reading. And
Right.
so it's kind of
They're trying to also just kind of, gaslight you in a sense to make you believe that you don't understand what you're talking about. So,
And
yeah,
Ryan Cohen's
yeah.
letter to the board.
I've noticed that people that are kind of trying to discredit what's the merit of the post aren't very informative about it.
Sure.
It's just kind of they're almost dismissive in a sense to convey that they know better, and it's pretty clever to be honest. But the folks that are responding to me today, it's obvious that they didn't even read it.
Mhm.
Or they just skimmed it because the one guy had said, "Well, what assets are there if they sold off all their assets?" I mean, that's not even what it means or says. Right. So, and then Constant Rock, who was the one that pointed out initially that I was wrong in the NOL post, he actually wrote a great post, except either he didn't understand or misunderstood what he read, but he's debating me on the business continuity. But I'm talking about the asset continuity. So I tried clarifying that with him that he's going about it from the wrong direction. So we'll see what he
Right.
says.
Yeah.
But anyway, I'll get back to the thing. So the continuity test here it is right here. By using a significant portion of the historic assets, you can satisfy the continuity test. You therefore get to do section 382L5 and have the entire null. You don't have to break it down to the 21% corporate tax rate or whatever. So you have access to the full thing. Now, by not having the business footprint, if you're a buyer, you're really limited in your options, right? So if you can't use the business continuity, so your only option is the asset continuity. So if you're a buyer and you want to take advantage of the NOL, which why wouldn't you? Either you roll the dice and you give the qualified creditors assets in the new entity and you hope that it's enough and that the judge goes for it. Or even if it doesn't have to be a 50-50 creditor shareholder. And this is kind of the point that I wanted to make earlier with people wondering when the squeeze would happen and being so dependent on the court dates. Even if you get a 1% shareholder distribution, it means that the old stock will not cease to exist, which will cause the theoretical short squeeze. The only way that the squeeze does not happen if there are naked short positions and if there are over leveraged short positions and if Seed has released in their accounting more shares to be traded than ever have been made.
Right.
As long as the stock survives, a 1% shareholder recovery is all you need, right? So even if you're a company and you give a 1% shareholder distribution, which, if you multiply all the shares by what they're worth right now, it's what, 20 cents, and there's 730 million. So 1/5 of that is what, under $200 million. So let's say if you add $200 million to your offer to take this company out, you give 1% shareholder distribution and you guarantee that you satisfy the asset continuity test. So it seems like a no-brainer to not gamble on whether you would qualify or not, if you can just, for such a small amount, considering the share price, be able to carry shareholders forward and satisfy the thing. So that was kind of the gist of it. In the fact that since I made the last post, there is no more retail footprint, and there are no more stores, and there is no more warehousing. It actually is great because it supremely simplifies the situation. Had they kept those things, you could make the reasonable argument that by maintaining some of the business continuity, having some stores, having some logistical and distribution and warehousing footprint, along with the creditors, may be enough. I wouldn't be able to debate you to say that that's wrong,
Sure.
right? But by eliminating the business continuity, all you're left with is shareholders and creditors. And the language is pretty clear to me. A significant portion of the old historic assets, right? So if you're going to consider 739 million shares not a significant portion of the historic assets, I guess that's a different conversation. But I consider that a pretty significant thing, because the one other, I believe, Michael, if you don't mind scrolling to the next photo, that there was a little blurb that said that you can get rid of minor things. Oh no, sorry, go up. Oh, spoiler, go up. I don't want to.
You're spoiling it.
Yeah,
Michael, what are you doing?
No, that's my fault. I told him to go down.
I'm just
Can you
fucking
go
with you.
up? Sorry, because I must have mentioned it earlier. If you could go up, like to the previous photo. Yeah, right there. So the new laws can discontinue a minor portion of the historic business without causing a problem. So this is where I say I don't believe that 739 million shares total share offering is a minor portion of the historic asset structure, and why I would consider that even giving shareholders a 1% continuity would satisfy the requirements and
Right.
really not extinguish the stock, and thereby, if there is a squeeze to be had, she would be squoze. So that was essentially it. I was wrong that the law stated that you had to include shareholders,
Hmm.
but at the same time, I by fluke found that um, in removing the entire business footprint, all there left is with this. So it doesn't really matter,
Hmm.
considering how things have played out. And then the cool little thing now, Michael, if you could go to that last photo above the Ryan Cohen tweet. Yeah, so the next one. Okay, so this one. Hold on, don't show the picture. Thank you. So this is exciting.
God damn it, Michael.
This is
It's
exciting.
delayed.
I'm
No, it's
just kidding.
fine. It's
I'm
fine because
fucking
now
with you,
people
man.
will know. So this is actually very, very compelling. So
Yeah.
in certain cases, the new corporation, and the word loss here is it's confusing. Old loss and new loss is just to keep the language straight. You can basically just say new corporation, old corporation. So the new
Mhm.
corporation can transfer the historic business assets to a partnership or related corporation without affecting the requirements to qualify for Section 382L5.
Okay.
So that's
Baby,
crazy.
that's crazy. You're right, Jake. Holy shit.
That is
They can
crazy.
literally sell off assets and portion of the company to Overstock, Dream on Me,
Uh-huh.
whoever they want to bring into bed with them. It
Uh-huh.
won't affect the Knowles. My God, brother. Nice
Yeah.
find.
Yeah.
That's
So
fucking nuts, man.
they keep the entire knoll. They
Mhm.
satisfy the asset continuity. And then
Right.
in my hypothetical, where let's say it cost them $200 million to keep those shareholders alive, they
Mhm.
can transfer that. They can send that to another partner like Overstock or Dream on Me or Teddy. They can get paid that $200 million back, however they structure it. And there you go.
Wow. There you fucking have it.
Yeah, that was pretty wild. So
That's
originally, when I
fucking
was writing this, I
mind-blowing,
was going
man.
to make the picture to be one of the Teddy books, but I felt this picture was cooler. It really summarized and brought it home. So who knows? Who knows how it'll play out? But there are way more possibilities that save shareholders that are being discussed. Certainly, people that are debating that the NOL perspective is wrong are not bringing these parts of the conversation to the table,
Right.
but there's a lot more than was previously known. So that
Mhm.
I thought was pretty crazy.
Yeah.
That's amazing. Nice find, brother. And Jake, have you done a look into what the total amount of Knowles dollar value is? Because I know they were crediting figures towards the old share buyback program that Trident had initiated, and they were buying back at some, $42 a share and everything. And I heard that there was over $1.1 billion in Knowles just garnered from that share buyback program. Could you maybe give some insight?
So the only insight I can give is that we don't actually know the true figure, because the 1.6 billion was according to the final quarterly 10K, I believe. On top of that, you have the share buybacks, which to my understanding are not included because I've never seen them graphed or tabled in any of the SEC filings as a line item on any one of the tables outlining the purchase and sale. So I believe that the share buyback NOL is not included in the 1.6 billion. I did make the mistake with the 4 billion because Travis had pointed out that those were he called them gap, something
Mhm.
about gap losses, which aren't NOL. But to go back to that, so the 10K says 1.6 billion. I don't think that it references the share buybacks. It also doesn't reference any losses after that last 10K, which is the last 4 or 5 months before bankruptcy, right?
Right.
Where all of it shit the bed, right? Where you had the largest losses.
Mhm.
And then in one of the legal fee statements, I found that there was discussion between the lawyers in drafting NOL adjustments because there were Harmon related losses for that would be attributable to NOL. So we have no idea what the number is. The only thing we do know is that it is greater than 1.6 billion.
Yeah, yeah, nice.
So
Wow.
it is larger than 1.6. We don't know by how much until that information is out. And the other thing is the entire amount can be used if you satisfy 3A2L5
Mhm.
by satisfying the asset continuity. And now the other thing is, excuse me, one other guy is debating, or maybe girl, I don't know, is debating with me about the shoot, what's it called? Like the tax, the Cody. So this guy that says he's from Deloitte and worked as an M&A guy in every one of his posts, he says that if you don't, if you have business expenses that you are discharging, they have to be taken off of your NOL. So I did some reading and I found out that that is only the case when you're not in Chapter 11 bankruptcy. So that was bullshit. But then now this guy
Right.
changed his tune after I called him out on that. And now he's citing another part of the tax code and telling me that he only used the word Cody because he was trying to simplify it so that I would understand, which I thought was kind of comical. And so he's now quoting 1.108-7 of the tax code, which I'm diving into. But again, there are exceptions to 1.108 where you would discharge NOLs dollar for debt that's being discharged. But there's an insolvency exception, there's a real estate exception, and there's a Chapter 11 exception that you can discharge things other than the NOL before you do that. So it's impossible to really know the math if you don't have all of the entire balance sheet or all of the info. But he's being a little bit disingenuous as well in his conversations about the Cody application because he's not acknowledging the exceptions that you have from what I had mentioned. Also, the only other thing I would add is that a lot of folks that have the bear outlook are discrediting the fact that a large chunk of the debt will be converted into equity. And I don't know if that counts as being taken away from the NOL either. I don't know if that's considered a discharge of debt or if you are foregoing that debt as a bondholder or a creditor, if that's just, I don't know. I don't know if that's a wash, but I feel like that would have come up in any of my reading had I not known it. I'd be happy to find out if I'm wrong about that one. But a lot of people are just saying that this company had 5.5 billion in debt. Now they have 1 billion in debt. That kind of equates to the amount that you are getting excited about the NOL. Therefore, there's no NOL left. And that's kind of the merit behind the level of engagement in that theory. So I don't really buy it either. But that's where I'm at right now to try to put that one to rest.
So are you saying with that last bit that you're saying some of the argument on the other bear thesis is that a part of the NOLs have already be applied to get us down to the 1 billion?
No, that the NOLs would be reduced according to how much debt was brought down. So dollar for dollar, as you discharge debt, you would reduce the NOL. Now that is in the tax code if you are not in Chapter 11 bankruptcy.
Yeah.
Right. So that was a bit disingenuous, which kind of caught me off guard. So
Yeah.
when you are in Chapter 11, it doesn't work like that. So instead of it's called CODI. I call it Cody, but I don't remember right now what it stands for. But you don't have the CODI impact the NOL when you are in Chapter 11. But now this guy says that there's something else, and he just called it CODI because he's an M&A expert and I'm not. So he wanted to simplify it for me. So I got to get to the bottom of what he or she is saying. But I don't believe that the NOL is being reduced as the debt is being discharged because I found two examples separate of one another of why being in bankruptcy court gives you an exemption from that. But I do need to read further into it because I don't know it for sure. I believe the NOL is preserved as it is. I also don't think that the legal teams would be spending time discussing the NOL if it didn't exist, despite the fact that the debt did go from 5.5 billion to whatever 1 billion, and I thought the entire 1 billion was bondholders, right?
I mean,
and if bondholders are being converted, then really what debt is left?
I think what he might be saying is like I mean, a lot of the debt is being either repackaged or whatnot. Like it's actually not going away. So it's not like you could say, oh, we were going to have to pay this bill and now we don't have to pay that bill, but we still want the NOL from that. I think the NOLs up to this point already are things that they either paid for or with the money from before or from the distribution. So it's not. So I think it's that you can't tack on other costs that you would have had or something maybe. But there's already concretely money that was spent and that will go to the NOLs.
Listen, I'll be honest. I do appreciate that that people do want to argue and yell and debate and whatever, good or bad, because it
Well, you have
it
to
makes
make
you have
sure
to
you
look at it again, right?
yeah, I mean, you obviously wanna make sure it's not someone who's just trying to completely discredit any of the work you're doing, there's always something, healthy in terms of debating, and you can usually tell the difference between someone who's actually looking just to start shit with you or someone looking to debate, but I agree, it does open up the means for discussion, and it's good, so.
Yeah. No, I actually, it's funny because I'm listening to you guys speak. After I've been speaking, I realize I'm talking a mile a minute. So sorry. I've just been going since I guess 16 hours ago. I started work, and then
No,
after I
you're good.
finished work, I went on the debate train, and I've just been replying and commenting. So I'm kind of flying high mentally. So
No,
sorry.
it's good, man. People are digging what you're saying, man. ABC, is there anything else that you maybe wanted to build upon in terms of or any questions you had for Jake primarily?
No, I'm just waiting on Jake. I know on the weekend I was kind of debating back and forth or kind of working with Salvatore, and I know Salvatore was flipping stuff to Jake, and I know in the back of your head you wanted to put something together for kind of that January 13th scope of what potentially could have happened. I know you wanted to look at the money trail. I guess my question, and there's no inference like where the hell is it, Jake? But I'm eagerly sitting, waiting for your thesis on that and what you tracked down because and I apologize. I mean, if there's anything I can do to help, if you want to task me with something, I'll certainly do some digging too. But I'm kind of excited to see what you might have put together just in terms of the Lazard and the money trail and Sixth Street, sorry, around that January 13th, because I almost believe this is crucial to really get an understanding, because if there is new ownership already and they're literally just slicing off the assets, creating this shell, are able to use the nulls as such, in a very bullish way, guys, then because the deal's already done, if that be the case. So I'm excited to hear what you have to say on that, but no pressure. I know you've been working straight, so I'll be patient and sit on my hands until you're ready to share.
No. I'd be happy to talk about it before I post it. I haven't posted it yet because I want to have a fuller, more complete understanding of points I can't come to terms with. But informally, I don't mind debating it. I'm pretty confident at this point that there was an attempt at an LBO that began in August.
Mhm.
It materialized throughout September and October and was culminated in November through the initial bond debt to equity conversion. That conversion so Lazard made the dealer manager agreement that brought all the potential interested parties. Let's say there's 2 of them, 5 of them, 12 of them, it doesn't matter. Let's imagine a number of interested parties that want to take this company and do a spinoff or a merger or an LBO. They consolidate amongst Lazard. That's why I really feel that Lazard is the middle and the centerpiece of all of it, especially on the financial side. So in August, Icon does his first 400 million depository unit pledge, right? With what's the legal team? Not Cole Shots.
Oscar?
His lawyers. Who are his lawyers that he was working with in
Oscar?
July? Is it, mate? I don't know. Doesn't matter. Doesn't matter. So in July, he does his first depository unit pledge, right? In November, in August, Ryan Cohen sells. Okay, I'm just going to say that because I don't want that. That's a tangent. I don't want to go down explaining this.
Sure.
2 days later, the company engages with Sixth Street. 10 days later, the company is already working with Sixth Street, Cole Shots, and Kirkland.
Mhm.
So that happens August 31st. It's made in an SEC filing.
Yeah.
September and October happen. In October, Lazard makes an amendment to their engagement letter with the company and makes a dealer manager agreement. The dealer manager agreement brings multiple parties together into one legal entity. At the same time, no, sorry, that's later. So in the actions of November, so one single person pays $3.5 million to the
Mhm.
company to convert their bonds to equity. It works out to being something like they got a $10 or $12 per share. David Simpson actually had that in one of his Twitter things, in one of his threads. That's where I got that from. I didn't have to do the math. But if you compare what that person was willing to pay for the shares to convert their bonds in November versus what the share price is now, obviously there's a bit of a discrepancy in what they believe the value was when they put down $3.5 million versus what the value is now. So I believe that bond conversion sets the commitment for everybody involved in the dealer-manager agreement to know that this is a go. There's a group of institutional holders that 2 or 4 days after the single retail bondholder makes their conversion, they make a conversion on their notes. But interestingly, they're not converting their entire set of 2024 notes. They're converting 34 and 44, which doesn't make any sense if you think about it, because if they wanted to convert the bonds and get out of the bonds for equity because they thought the company was going to sink, they would be offloading their 2024s, right? Because those are the ones that are at highest risk. But they're not. They're pledging their 34s and 44s, which tells me that they have a leveraged buyout in mind. So that happens a couple days after the single bondholder does their conversion. The institutions do a conversion. Lazard, actually, let me get the dates because I don't want to just give generic information. I've got all my Lazard dates.
Yeah, yeah, of course. Tainted
Let me
stain
let
with
me
the
let me
$2.
get my receipts.
All right, get the receipts out. Let's see.
So-
He's got the goddamn receipts, man. Pull them up. Let's see him. Tainted Stain with the $2. Knoll is a good death metal name. Actually, that's pretty sick. Not financial advice. Right on. We better see a goddamn metal band named Knoll, man, after this is over, man.
Yeah, I think net operating losses is going to be the name of a business or a t-shirt company if I ever make one.
That'd be sick.
So-
All right, take it away for us. What do the
Okay, so
receipts say?
December 14th, Lazard gets paid $450,000. I still can't justify why that is. Maybe that's like two and a half work fees, or 2 work fees and another 50 grand. It doesn't really break down evenly, so I don't want to attribute it to the work fees that easily. But December 14th, they get $450,000. A week later, December 22nd, they get a payment for $1,501,491, which is a payment so specific it's obviously a percentage of a sale. So something happens on December 22nd that they get a cut of, right? So to set the stage, at the same time, the company is doing a public exchange of their bonds, and they're trying to get their bondholders to publicly convert their bonds into either alternative bonds with different dates or different interest rates. And this is one of the things in the objection from Life, where he's saying that this public exchange was sabotaged, right? You can make 2 arguments for that. One is his argument on the swap contracts, which I'll be honest with you, that's an impressive amount of sleuthing through the data, and I can't make sense of it one way or another, but I'll give you a more simpler explanation. At the same time that the company is trying to do a public bond exchange, Jake Freeman shows up, and he makes his letter where he decides what the bonds are actually worth. And by making that letter that he sent to the board for the bond notes, I believe he sabotaged the exchange because he set a floor price for the bonds that was not in line with what the company was trying to convert for. And so because of that discrepancy, I think it held a lot of people back. But let me make it clear that while they're doing that public bond exchange, Lazard gets paid the 1.5 and change million dollars. So either they were paid regardless of if the bond exchange was successful or not, or it was partially successful. And at the same time, in November, this is a private bond exchange. This is not something that was marketed to bondholders. This was something that was negotiated by the company, so the board and the bondholders, like a side deal almost, you would say. It wasn't public, right? So these 2 things were happening at the same time. So the public exchange gets sabotaged. The private exchange of the one bondholder and the institutions goes through. Lazard gets paid, right? Then we go into January, and I made the one post about the legalese where it's the Kurtz declaration. So David Kurtz is the vice president of something at Lazard, and he makes a declaration. Basically, it's what you have to do when you want to say, hey, judge, pay my company. Here's the shit. In that declaration, he uses very specific language about very specific periods in January, and I don't remember it off the top of my head. So please, if you want to go reference that post afterwards or whatever, but he makes specific distinctions by referring to December, the end of December, mid-January, the second week of January, by the end of January, and then summarizing all of January. If you were making generalized statements, you wouldn't use the language to distinguish so many different periods of time. So Lazard is soliciting interest for the company. In December, they are already approaching strategic buyers, financiers, and people that would provide the dip, saying, hey, we want to enter Chapter 11 and we want to emerge from Chapter 11. Would you provide us DIP financing? Would you be a strategic buyer for some or all of these assets? These things are happening. I mean, Lazard admits as much in that declaration, right? So this company knew that they were going to do Chapter 11. I believe with what happens in January, they knew that JP Morgan was holding them down and they were going to control any outcome, whether good or bad. So in December, the company is saying, hey, we may have to need Chapter 11 bankruptcy, and do you want to provide financing or funding? He uses very interesting language again in April. If I'm going to jump around a little bit just because on the subject of the DIP, saying by mid-April, we had no parties interested in providing DIP financing. Nobody wanted to give us any sort of money to like operate throughout Chapter 11 to be able to make these disbursements, pay these lawyers, and exist. And then a week later, which is not mid-April, they have the DIP. Right, so he uses very, you know, and I kind of reference like the ultimate bear trap because I can't get enough information to substantiate it one way or another. But it is very interesting that he's using these specific dates of time with specific language to say that they had or did not have specific outcomes that led them into Chapter 11. I think, as a whole, I interpret it as it's just covering your ass. If you are a creditor or a disgruntled anything, after this is all said and done, you may want to sue the company and say you didn't need to go into Chapter 11. You didn't need this. You offloaded all this debt. You rejected all these leases when you could have, you know, survived and done this and that. By using the specific language and timelines that he does and saying that they had a liquidity crunch and they couldn't be able to operate, honestly, it just seems like a giant, here's why we went into Chapter 11. We needed to do it. You can't say that we didn't need to do it. So let me go back to January. So in January now, Lazard got paid in December, right? Lazard got paid twice in December. Lazard also gets paid twice in January. So January 13th, right, is the big old PitchBook thing. So PitchBook says this company's been taken private by private equity, 100% ownership through a merger/LBO, January 13th. Suspected parties are, and don't quote me because I'm doing this off of memory of a photograph, Berkeley, Alex Partners, Kirkland & Ellis, and 6th Street. I believe it's 6th Street. That fourth one I may not be remembering correctly. On its own, that PitchBook data is weird because you can't substantiate it. There's no news to support it, no anything, right? But there's a series of events that happen at the same time that I think do support it. So let me pull out the trusty receipts here. January 13th, Lazard gets paid $1,430,000, $430,388. Again, one of these percentage fees of a sale transaction. Something happened on January 13th. I believe it was a change of control of the company, personally. And I've discussed this with Salvatore, and it makes the most sense. And it explains the event of default with JP Morgan. Because in the credit agreement that I've read, a change of control is one of the factors, that's actually pretty high up on the list, of what would initiate a default.
And it lined up with like the stock, how it ran up too, because I think we topped $5.68, almost $6. So we didn't break that $6 level until February. But I mean, it could make sense why we kind of ran up from because I remember
from $1.
From $1, yeah. I remember the sharp decline too, because I had bought options that week. I put $600 into $5 calls, ended up with 20,000 shares, and the stock ran to like about 580, whatever it was. So I was up in those call options alone 75K, and then the rest of my portfolio was about 100K in January. So it was odd, man. Yeah, and the reason I bought those options was because of the Teddy belt, right? It was the 13 on the belt, and god damn, man, I made so much money, but I didn't sell the fucking options. It was nuts. I mean, yeah, of course, man. Like I diamond hand, like I was thinking I'm gonna buy a fucking house, man. The next thing I'm doing is I'm buying a goddamn house. And
hindsight's a bitch, right? Like now, you could have sold them, but at the moment when you see it go from 1 to 5, you might think it might go from 5
I was
to
thinking
10.
this was it, yeah, because I was sitting there thinking, all right, this is it. This lines up with the fucking tinfoil. RC's fucking moving. this is happening. And what did we see? We saw actually via PitchBook that it was actually happening, but the deal was obviously intercepted. Mo Money with the $2. Jake, is
Was
DRS
it
short for
intercepted?
digital rectal exam? Sorry, go ahead, ABC.
Now, my question is, was it intercepted? I do think the Jake Freeman that Jake has talked about certainly affected the outcome in come November and December.
Yeah.
But this LBO, I don't think it was affected. And for my person, I want Jake to continue on with this timeline because he's got some great positioning here.
Yeah,
in
this
terms
is
of-
amazing.
I've got to go all the way to April. So if you want to ask questions, go ahead because I got a lot more to go.
Yeah, I want to hear it. It's good.
Well, I mean, I've got my kind of stepping stones too in terms of dates, and it really has to do with, you know, the FTC, the HSR in terms of approval, and then the people resigning from the board. Where I was really curious and where you've done a phenomenal job is checking into Lazard, because it's one thing to have a series of events, Jake, but it's really the money trail that kind of will coincide with stuff. And that's where I know you worked so damn hard in the past little bit here trying to put that money trail in, because I've had this thesis that, you know, an LBO happened, and then, you know, the only thing that kind of screwed me off was RC's tweet about shooting the red balloons down. But then it came to my point being there, if they would have declined, if the FTC and SEC said no merger acquisition, sorry, you're breaching antitrust laws, we can't go ahead with this, there's no damn way these 5 guys would have stepped down on March 13th. And so therefore that kind of made me step backwards and go, there's more to this. And because of the pitch book, and now with your telling me that on January 13th, Lazard got paid 1.4 million, that's a lot of money. And in December, they got paid 1.4 million plus another 400,000. And then if you backtrack that, you'll see two movements from both ICANN Enterprises for $400 million each. He actually restructured his entire credit facility for $1.5 billion at that time too. And so I don't have it all lined up like you do, my man. So I'm very appreciative. I want you to continue, and I'll just sit here and drool.
It's a good time. It's a good timeline. Yeah, I'm liking it.
So yeah, like I said, there's a lot more. And I'm going off of memory. So if I miss things, I will double back. So the first thing I want to double back on is actually, no, you know what? Let me finish January. So January 13 comes around. This is the one tinfoil I will entertain. I believe that the LBO knew that it wasn't going to go through. And I believe it was done deliberately to initiate the default. That is a tinfoil because I have nothing to support that. But that's what I think. That's the tinfoil that I would believe.
Can I support that? And I'll tell you why. It's great tinfoil because you create this LBO, you've got this merger acquisition in play, yet you know the people that have the ABL in charge have their hooks in this deep. You know, JPM literally had their hooks so well entrapped into this. And they even actually, I think, and maybe you can confirm, they actually had the CFO assign trademarks over several days before his death. And so not only did they have the hooks in terms of both the ABL and the FILO financing, nobody could sell this company. And so therefore they knew that if they did go ahead with an LBO merger, which I believe they got approved from the SEC and the FTC and the HSR to move ahead. However, it was JPM that they knew was going to block this. And so therefore what had happened at that point in time in January, you saw a restructuring of the deal for the ABL where they brought it down from $1.1 billion down to $575 million and provided an extra $100 million in cash. But I think that was still nefariously done because JPM also knew that they couldn't get out of this without them conceding the ABL. So the LBO was approved, and they matched all the covenants and the conditions of the SEC and the FTC come, you know, March and April and so on. But they had to go through bankruptcy in order to get that protection so that they could expedite the payoff for JPM and get rid of their hooks.
That's just great. You want to know? And so I have something
Beautifully said.
Yeah. The best thing that I have to support that is, remember, in open court, JP Morgan's lawyers didn't know the ABL was paid.
That's right.
They stood up there saying that they have super priority, and then the lawyers for the company came up and said, no, you're paid, you're fine, you're off.
Yeah.
And the judge said,
at that point in time,
5 business days, you guys are out of here because your facility's paid. They didn't know.
No, and the funny thing is not only they were at a 575 million, which they had to expedite fast because remember the first day of court is like they literally seized our bank accounts, Your Honor. We have payroll to do next week, and so at that point in time, they were expediting the full payment of bonds that weren't even due for years ahead. And they got it down to 70 to 80 million dollars with a complete balance. Then once they got the protection in court, they came to the deal. JPM said, okay, guess what? I got to wash my hands. I'm now backing out of this because the whole commitment was laid out in front, paid off, and there was nothing they could do under Chapter 11. And that's how they freed themselves.
Yeah.
Absolutely.
Real quick, Crayon Green with the one PPShow gifted membership, man. Appreciate the love. Looks like Doc Circle's got it, man. Just give a good thanks in the chat, man, to Green Crayon. Right on, man. Appreciate the support. Go ahead, Jake.
So going back to January 13th, this strange confluence of events occurs, right, with the LBO. The default occurs. It's very cleverly worded in the SEC filing by the company about the default because they do refer an over advance. So there's some sort of structure to the credit agreement that I don't fully understand yet, where they have to have a certain amount of inventory to match as collateral for the ABL. And they were selling so much product and didn't have the money to restock their inventory that they were out of alignment with the stipulations of the credit agreement.
You're exactly right. And that's how the ABL works in a sense. If you have 650 stores, they do a pro ratio based on store count versus inventory standing. And in January, Sue said, we're going to start closing up to 300 stores. And that's why JPM started to tighten everything at that point in time, because they could leverage that ratio in terms of store count versus inventory on hand. And that was the reasoning to start tightening up. And that's where Sue did the video literally about 10 days and said, one, it'll also help your thesis knowing that Sue was asked, do you know of any merger acquisition? She laughs and says, no. Why? Because it's already done back in January. So that's why you get the facetious smile, like if you guys only knew, so to speak.
It was like a nervous, it was a nervous kind of like, laughing, like the nervous type of laugh. I agree.
The question
It was
do you know of
weird.
any rumors? Absolutely not. I don't know any rumors. But in her brain, she's literally saying, guys, this was done back in January. But I will answer your question. I know of no rumors.
Right.
But
and it'd probably be an NDA too.
Yeah. And she filed it on the SEC for plausible deniability, because if this deal was done in January, and as Jake was saying, JBM was starting to tighten the wrap based on the ratio of store count, and they were starting to close stores at that point in time, which means that your liability or your commitment to the ABL has to be downsized according to store count.
Yeah.
So that's why they expedited it. But they knew they were bankruptcy anyways. They almost set JPM up.
I remember it being a big deal too when Sue Gov put that with the SEC, like when she filed it. I thought it was a little bit bizarre, just kind of simple conversation with eToro, interview. I didn't really see the need to put it on the SEC, but you're right, because they shortly, filed for Chapter 11 and needed to be on file there, that there was no kind of, something happening prior to that. So her response to it like tells it all. It's like you can just tell that something's off.
Yeah.
Let's get back to some more dates, Jake.
Well, hold on. Before I keep going, I just want to make sure, because this will probably take me like at least another 10 minutes to explain. Is that okay?
I'm good.
Dude, take your time, man.
Okay.
Yeah, we still got 30 minutes left of the show, so I'm
gonna pull up
plenty of time.
the actual post of the legalese thing, because it's gonna give me some insight. But let me keep going. So January 13th. Okay, so that occurs. Now January 20th. So it's funny because before I even go on. So the SEC filing about the ABL specifically mentions the disproportionate relationship between the inventory and the amount of the loan and how they're not replenishing the inventory, and then says, and other covenants. So it gives one incredibly specific response and then doesn't, which is very interesting wording, right? Because if you wanted to make an actual, hey, we're in a shitty position, you would list all the reasons. I mean, if you're going to list the first ones in such concrete terms, why are you making such a kind of juxtaposed statement afterwards? So that was very interesting. So the SEC filing says, and other covenants. I believe that was a change in control. Now let me move forward to January 20th. So there's two SEC filings regarding the restricted stock units. They come out on different days, but interestingly, the restricted stock units were taken from the directors and then given back on the same day. The reporting date, even though the filing date is the 24th and I believe the 27th, the reporting date on both of those filings says that the event that triggered the SEC filing was January 20th. So the restricted units are taken and same day given back. And David Caston is the power of attorney for every member of the board surrounding those RSUs. So he takes them and he gives them back. In that same period of time, between the supposed LBO on January 13th and the restricted stock unit takeaway and apparent immediate give back, Mark Tritton's severance is canceled.
Yeah.
Right?
Yeah.
So David Caston just says, no more. Between the LBO and the restricted stock units. Now, at the same time the restricted stock units are taken away, I believe, and don't quote me on this is where Carol Flatten comes in to join the board. And now I have to give credit to Salvatore because he told me that he believes the reason the RSUs were taken away was to remove share compensation so that Carol could join the board, because she's a disinterested person. She has no vested interest. She doesn't have any RSUs. And once she was brought onto the board, the RSUs were given back. Okay, so to further substantiate that, another thing that Salvatore told me that I think is very plausible and lines up is that the change of control that occurred on January 13th dictated the course of action towards the board. So there was someone above the board of directors telling the board of directors how to play this out, calling the shots. And I believe a very interesting part of this saga will be the Mara Serhal lawsuit against the company. She's asking for an exemption for stay of proceedings, which that means when you enter Chapter 11, any lawsuits against you get like a stay, which means they're stopped. And she's requesting the judge to give her an exemption to be able to sue the company while they're in Chapter 11. That'll be very interesting to follow because she complains and alleges that even though she was in a very senior role, Sue Gov suddenly around January stopped treating her like a serious person and was micromanaging her, and then she alleges took over her role. So I don't remember off the top of my head what Mara Serhal's role for the company was, but she alleges that Sue started doing that role on top of being CEO. And then she says that she didn't really believe in the alignment of the actions and how Sue was steering the ship. And she's like, well, what if you brought this company to bankruptcy? This is kind of weird what you're doing and how you're doing it. Really supports the theory that Salvatore brought forward that there's someone pulling the strings, for the board. And the change of control aligns with the January events. And I believe that's the case.
And
I believe since
especially
January 13th, the board is acting on behalf of the person that will be the owner or the buyer of the successor entity.
100%. And the confirmation being as if the board was nefarious in any way or not on our side, I guarantee you Mark would still be receiving his severance pay. And then just in a recent couple docket drops, that lady that you're referring to, they brought forth the details of that issue back in January with Sue Gov and her name. They're also going after her to say, literally, you owe the company money back. And again, that type of evidence that you're going after other people that owe the company money back is, especially with the Triton saga, is definitely confirmation. So when we got that tweet by RC, and it was very similar to the kind of the Bed Bath and Beyond I just got off the phone with, that was an indication to me that it was almost like a little face slap to Mark Triton, because it came out shortly after Triton's pay was stopped, I believe. I'm not sure the exact date, but I want to hear some more dates because I got really excited come the February and March timelines, because we actually saw movement from the street as well. But I'll let you get a little bit closer until we get into the February type of range.
Yeah, like I said, please interrupt me at any point because I know I'm kind of getting a little bit tangential, but I just want to lay the foundation so everybody knows where.
No, this is good. Yeah, this is good because it leads us down a path of, sometimes it's easy to forget what has happened over the course of 9 months, 10 months. So it's good to be hearing this, and yeah, let's hear it.
Right on. So then now February 3rd. Okay, so we're moving into February, and I'm going to be jumping between two documents on my phone here. But February 3rd, Lazard gets paid $4 million. So I suspect this is the work fee. Now, Travis has contested me on that and said that the work fee was paid on April 21st. But I will say that it doesn't matter because the engagement letter and the contract that Lazard has with the company stipulates that they can only get paid the work fee once. So either they got paid the work fee on February 3rd or April 21st, but they got paid $4 million on February 3rd and $4,200,000 on April 21st, and those can't both be the work fee. On top of that, a few days later on February 8th, Lazard gets paid $3,105,263. February 6th is when the company makes an SEC filing that B. Riley Securities is going to be the securities underwriter, which is a very important distinction, for their ATM share offering. What I didn't know at the time until very recently when I've been pursuing this timeline is that by being the underwriter, B. Riley is committing to buy the shares from the company at that market price, but they don't necessarily have to sell them. They just have to give the company money equivalent, and then they can hold the shares, they can dispose of them, they're allowed to do whatever, but they're not obligated to do anything. So on its face, it doesn't make sense why B. Riley would hold the shares. Except in the SEC filing, another thing that I missed when it happened in February is that B. Riley brings forward one of their subsidiaries into the filing, B. Riley Capital 2, or something like that. I don't remember it off the top of my head. But one of their subsidiaries is named in the SEC filing, and everything that I've seen so far in terms of securities underwriting tells me that if B. Riley Securities is underwriting the shares from the company and moving them to B. Riley Capital as a holding company, they don't have to make that disclosure.
No, and I'll just add to that, because I looked in that very, very deep, because there was two aspects from B. Riley. There was this $300 million ATM that he was in charge of raising. And then there was the $1 billion offering, like you said, which was structured as a third-party underwriting transaction. And so you're exactly right. This second affiliate, and then I went and looked in deep into that. And the reason he did not have to disclose that is because it fell under something called an investment 13F rule, as opposed to a 13D, where you literally had to file within 10 days to report your acquisition of equity. Under the investment rule, which B. Riley fit under in terms of description, he did not even have to report except on a quarterly basis. And that's where the rule 13F really triggered me. Go, he doesn't even have to report this. And then the funny thing is, from March 27th onwards, or whatever date, I have to double check, we literally saw the volume start to escalate. And that's where I believe over potentially up to $1 billion was acquired in a third-party transaction through B. Riley, simply because, one, he didn't have to report it, so we would have never known it was going on in the background, and he was using it as kind of an investment closet, so to speak, this other one that you're referring to. Yeah. And the volume went absolutely insane from that period on. And the funny thing is, we hit almost $1 billion in trades on one particular day, which was shortly thereafter, and yet the volume didn't go up much. And that's when I said, oh, they've got these guys, because literally, I bet you if B. Riley's third-party underwriting bought up, say, $1 billion worth of equity as the price was being hammered, they used synthetics and naked shorts to keep, because the price only went up 20 cents. Yeah. But on that day, the volume was insane. And for the week and a half, 2 weeks before, that volume was going up. And if you looked at the buy and sell rates, it was like 90 to 10, 90 to 10, 90 to 10. And so I thought, oh my God, B. Riley is involved in this as a third party holding for some other entity out there.
Mm-hmm. Yes. So that's great input. And that's exactly where I was going with it, is under the SEC filing, excuse me, under the SEC filing, B. Riley has all the rights to sell those shares, but they're not obligated to. So why bring in the subsidiary? The only logical explanation I can give is as a holding company, as like they are moving those shares away from the public market to hang on for somebody. I don't know, maybe for plans. I don't know, but it was very strange to me that they had the subsidiary involved with the ATM offering. And then let me see what it is. The other thing that didn't add up to me was that the company, I think, got somewhere between, I don't remember exactly, but $220 and $240 million from that ATM offering by February 8th. But Lazard was paid $3,105,263, which is not consistent with their engagement letter for their payment for facilitating the equity offering. Unless there's a stipulation in the engagement letter that if they will refund 25% of their fee from the equity offering if it is tied in to another sale. So if there's another transaction from another party coming in when those shares are being dispersed, they credit 25%.
And why would you have that clause in there if you don't have a third party building a position on the side, especially through an a 13F where they don't even have to report it? So to have that clause in there, if Lazard, who was orchestrating, who was literally the deal manager, they were the one conducting the entire transaction. So why would you put that clause in for a 25% rebate? They had to know that B. Riley was on the side garnering another possession for potentially another third party.
Yeah, I mean, 25% works out to be over $1 million. So they're giving the company $1 million discount. You're not going to do that unless it's a friendly party. At least I believe. If you can give me an argument as to why a nefarious party would be involved and you'd be giving the company a discount on that transaction, sure. You'd have to make the claim that Lazard is working against the interests of the company, but everything from the engagement letter to the dealer-manager agreement tells me that that's not the case. There's a lot of evidence to say that Lazard is a friendly party to the company, and you're only going to give a discount on one of your transaction fees if you're bringing someone friendly to the table. So that happens February 8th. February 23rd, Lazard gets another $750,000. Okay? At the same time, let me just get my calendar here.
Keep in mind, I'll just stop you there for 1 sec. So January 13th, if there is a leveraged buyout, literally what happens is you must report within 30 days to the SEC and make notice of that and to get approval, so to speak, because they do have to evaluate the antitrust issues and make sure that there's no conglomerates that are too big, depending on the industry and so on. So on January 13th, you must file and you have 30 days. And you can file it right away, or maybe they filed it a little bit before. I don't know because I didn't see the filing date for that because it's not privy to us. But the SEC has 30 days from that date of the buyout to reply to you, whether we approve it or not. And so that 30-day window brings us to exactly February 13th. So January 13th, it actually brings us to February 12th. And so we were anticipating PP. I remember, tinfoil, the option ramps at the end of February 17th was insane. I think there were some $80 calls. It was one of the biggest ramps out
40,
there.
it was the 40s, yeah, I think. And the 80s was
I thought it
January.
was insane. I think it was turtleneck, whatever the day was. It was
Turtleneck
day or something.
Yeah.
Coming up on that Friday. So you have 30 days. And so I was expecting a reply of some sort. Yeah, it's all approved. Mm-hmm. Then RC on February 14th tweeted, "Stop shooting down my balloons." And so then, and there was rumor too that actually at that time, Carl put a put against the SPY, like a $3 billion play against the SPY. And I thought, okay, he's pissed off because they didn't get approval. And it's like, okay, the deal got shut down. They're not, there's no leverage buyout or whatever. And then what happened was...
And no need for SEC filing disclosure.
That's right. And then we got to March 13th, and all 5 guys resigned. And it's like, well, if you didn't get the approval, why the fuck would you resign? Because...
That's what I've been asking too.
That's right. So it brought me back to the thesis that they had to have got approval. RC uses a little bit of reverse psyop, stop shooting down my balloons. Maybe it was because of the balloons that were flying around because, whatever, who knows? We often try and tie in tinfoil. But The funny thing was on February 26th, what happens? Ken Griffin shows up and doubles his stake in Newell and doubles his, investment in Newell. It's like he must have got wind from the SEC or the FTC that a leveraged buyout has happened because he's doubling his stake. And then what happens on literally 2 weeks after that, and you have to literally take action within 30 days. March 13th, all guys resign. Brett sells the shares at a loss. And that to me is like, okay, the deal was done because they would have not followed through on those tough covenants and conditions by the FTC and the SEC if there was no leverage buyout that wasn't approved at all. But I'm getting too far ahead. I wanted to jump in there because for me, that February 12th to the March 13th, which is exactly 30 days later, It's all in 30-day increments with the SEC. And they have to report you within that time frame. And if they don't, they'll actually send a message to you saying, sorry, we haven't decided, we need more time. And that officially never dropped. So I knew that they were meeting those 30-day timelines.
Yeah.
So January 13th, February 12th, March 13th, all 30 days. And it just, at that point in time, was like, wow, they had a leverage buyout in January. But anyways, Jake, I don't want to get too ahead of you because I love what you're doing, my man.
No, thank you. Absolutely. That's very good. The only other thing I'll add is that with those February dates, February 11th, Marjorie Bowen, one of Ryan's board members that got added, steps down. Right? So job's done. Right? Kind of idea. So where did this happen? Also in January, if I can go back to January for just a second, to further support that something was happening, in January, Lazard has to amend their engagement letter with the company. I believe because they discovered they were soliciting purchase structures that were not accounted for in their commitment, and they were bringing offers to the table for the company that they weren't being paid for. So that also happened. Marjorie Bowen leaves the board, and then an interesting thing happens. The equity offering triggers B. Riley agrees to be in a 90-day lockup. Right? So this is I'm kind of getting into the weeds because I'm not this far. B. Riley does the offering on February 8th. They don't say if they sold the shares or they kept the shares, right? But they underwrite the shares, they give the company the money, they enter a 90-day lockup. That 90-day lockup coincides with the day of the vote for the reverse split.
Yeah.
So the 90-day lockup is until market close on May 9th, and the reverse split vote was for 10 a.m. I feel like if Chapter 11 could have been averted, or if they had the money to go on, or maybe this was a sort of working into the bear trap idea, you have the vote on the reverse split in the morning, and then you do the merger before market close, before the 90-day lockup, or you do the merger after, right at market close. I believe maybe there's a rule for that. To coincide with the 90-day lockup, the reverse split was being voted on the same day. So that happens in February. March 27th, the company discloses the float. I don't remember why. Anyway, let me skip March because I don't want to fuck it up, and I'm not that well versed on it like I am on January. Let me move to April, because in April, Lazard, through their declaration, states that they are pursuing sale and restructuring for this company, not going concern. They stop using the going concern language, and they amend in mid-April. Lazard engaged with potential investors, identify plan sponsors, and in connection with Chapter 11 restructuring or providing post-petition financing, which is financing for after bankruptcy. In mid-April, which is the week before they secure the dip, they say that nobody's interested. We're in a liquidity crunch. We don't know what's going on. Lazard moves forward with getting a payment on April 14th for $161,602, despite saying that they haven't been able to find funding, haven't found buyers, haven't found anyone to give post-petition financing, and haven't found anyone to provide a dip loan. They get paid that same week. Wow. And then the following week, April 21st, they get paid $4.2 million. The Kurtz declaration goes up until mid-April to say that they don't have dip financing. The debtor find themselves in an untenable liquidity position, necessitating the commencement of this Chapter 11, according to mid-April. But then, of course, we all know the following week, they do have the dip financing. They have the super priority status by paying off the ABL. The FILO was extended by $100 million and rolled up. There are so many counterparties to the FILO and the dip, or not counterparties, supporting parties that have also signed the SEC filings and the bankruptcy documents. It's crazy. It's crazy. And then other than the Lazard payment dates, the only thing I will say that there are 30 parties of interest, be that strategic buyers, lenders, dip, or post-petition financing, though they say in mid-April, nothing had materialized that could have prevented Chapter 11. Right up until the last moment, I feel like the setup was to go into Chapter 11.
Absolutely. And I think because it was an LBO in January, the new owner said, how can I take this beast with $5.1 billion in debt? Now, they had to do certain things in order to meet the criteria of Chapter 11. They had to try an ATM offering, which they did with the $300 million.
Mm-hmm.
However, they also had to do the HBC deal, which again, I believe was used on purpose for both the narrative of HBC's history and also to reserve 311 million for an additional party, because
Right.
again, that transaction was for a third party as well.
Mm-hmm.
And so they literally had to follow the protocol in order to enter Chapter 11, but a new owner was already in place. And if your company is in debt by 5.1 billion and you take all the steps, you are allowed to do a reverse split, ATM offering and everything, and you're allowed to go into bankruptcy even though you're a new owner and you acquired it maybe a month before or something, or several
Right.
months before.
Yeah.
Yeah. So I'll leave it there because, like I said, I haven't fleshed it out completely. That's why I haven't posted it yet. But
Sure.
considering everything I've said over the course of the last however many minutes, does any of that sound like a Chapter 7 liquidation?
It doesn't. It sounds to me like a long drawn out executed plan to go into Chapter 11 to deal with the debt and deal with the the issues with the company, to come out stronger. And we've seen it before. It's even being, some people have pointed out that Chapter 11 is being utilized as a strategic way, to take care of, companies' financials and things like that. So yeah, it's fucking nuts, man. Like when you actually view the timeline, it's no longer this jumbled mess. It's like, okay, let's look at this. And then even within your thing, there's a lot of other things that were happening, within your timeline as well. Like, things in terms of tweets, obviously, things in terms of certain board members coming on, the 3 board members that RC initially had, then the 2 that leave, this whole timeline, man, is so thick and it needs to be so detailed. It was excellent, man. I mean, you really lay down, kind of how this thing has been portrayed and laid out. So, yeah,
Thanks,
it
man.
was crazy.
I promise when I do post it, it'll be a little bit better organized. I'm trying to
Sure.
just tell it from memory as I was a little bit all over the place.
Yeah.
The only other thing I'll say is that remember that Ryan Cohen brought the board members.
Mm-hmm.
Those board members made the strategic committee, right? The other thing that I lean into when I finish the post is the letter to the board that Ryan Cohen had written, and then the cooperation agreement. There's some substance there that I really like. So the Ben Rosenzweig, I don't remember his last name. He is the M&A expert.
Mm-hmm.
He leaves December 20th, right after the private bond exchange is complete. That's when I feel like by the end of November, beginning of December, they knew what they were going to do. That's my theory, is that was when they knew how they were going to handle things. They had the dealer manager agreement, and by mid-end December, Lazard is soliciting parties for DIP financing, going concern, Chapter 11. All of this starts happening right after Ben leaves the board.
And
Then Marjorie leaves the board in February, right after the equity offering. And then Shelley Lombard, who was one of his other board members, is still here in the board. And then the last time she was on a board where the company went into Chapter 11 and emerged, she had stuck on the board as well. I don't remember which company. It's in my notes. She stuck around through the Chapter 11, and she was the only strategic board member that was added to that company that stayed into the commencement of Chapter 11, and she left when the company came out.
Yeah.
Wow.
And keep in mind the bankruptcy, if you do look at the April 23rd bankruptcy filing, there is reference to a December 12th or 21st where the forms were actually filled out for bankruptcy. So to confirm that, yes, in January, prior to the LBO, they were already talking about. And the funny thing is they announced bankruptcy on April 23rd, and they were literally in court on the Monday, because they announced it on a Sunday, right? They were literally at 2 p.m. in court, and some of the documents were actually featuring December dates. So we know that this was staged from well beyond. But there's nothing illegal with filing bankruptcy, especially if you're a new owner and you've acquired this company and you need to shed massive debt based on some of the shit that you've probably seen in the books and the share buybacks and the nefarious actions of certain prior CEOs, you have every ability to leverage the bankruptcy laws to help you shave off this debt and then come out with a new mission and vision. And that's what I think is next for us.
Beautiful.
Absolutely. I think, yeah, when I'm looking at complex situations, I try to find ways to break them down into their most simplistic form.
Right.
So looking at the Chapter 11 bankruptcy, I've been saying this for a long time. It's the best thing that happened to this company. I think at the end of the day, what did Chapter 11 give this company? Control of the outcome. There was an LBO attempt in January. It was blocked. Whether that was intentional or not, we won't know until it's over. Chapter 11 eliminated the possibility for January to happen again. They get control of the outcome. JP Morgan's lawyers don't know that they've been paid when they show up in front of the judge. 6th Street has super priority. The DIP and FILO get rolled up. All of the parties that have signed for those loans, turns out that there's so many connections between them. It makes sense. And then you have all the added bonuses with Chapter 11 that you get to offload the debt. You get to get rid of the leases. I mean, this is a company, don't quote me on it, but I think I read somewhere that they were paying $960 million a year in lease payments.
Yeah.
Right? So
Yeah.
the lease costs themselves were suffocating this company. You get rid of everything that's strangling your cash flow, everything that's limiting and crippling your business. Chapter 11 is you're shedding old skin. Right. But at the very simplistic, most basic idea for me of why I thought it was great is it gives you control of the outcome. They can play it how they want it. The extension for exclusivity was granted. They're in full control.
Yeah. And the benefit being also, Jake, is that when you as a company, and it's really a 6-month ruling, the U.S. bankruptcy trustee will literally stand back from an arm's length distance and overview the entire process. And what they did is they expedited that payment towards the JBL in an astronomical way, because think about it was 575. They were reducing the store account. JPM was putting pressure on. They literally got it down to about 70 to 80 million dollars. And don't forget, this was bonds for the close ones and the far ones as well. And so that also confirmed for me too that as a U.S. bankruptcy trustee, you are not allowed, even if they are a secured creditor, to show preferred preference to any creditor whatsoever within the 6 months of declaring Chapter 11 bankruptcy, because the U.S. bankruptcy trustee could come in and reverse any financial decision you've made. So once I saw that they were literally allowing them to go into bankruptcy, even though they paid down the ABL so drastically, that said there's no liquidation because they would have broken bankruptcy laws.
Yeah, that's a great point. And you made me think of something else that I'll just add to support that argument, is that so you mentioned that they filed bankruptcy on Sunday and 2 p.m. on Monday they're in court, right?
Mm-hmm.
In, I believe it's docket 10, the Holly Etland Declaration, one of the first dockets, doesn't matter which one, the ABL is there. It's listed as owing, right? So on Sunday, they had the ABL. 2 p.m. on Monday, the JPM lawyer is told that the ABL's paid.
Yeah.
It's just like,
Right.
I mean, what more do you
6th
need?
Street. So what I'm saying is, in case I'm not being very clear. 6th Street paid the ABL. They had to have, because they're providing the debt, the DIP financing, right?
Which made them
The
super
company
secure.
is not in control of their finances as of the moment they file, right?
That's
The board doesn't run the company, right?
Mhm.
So
And-
Sunday they have the ABL. Monday at 2 p.m. the ABL's gone.
That's right. And the funny thing is that they were second in position as a secured credit because the ABL took priority, right?
Yeah.
And then the DIP financing gives you super credit, but if there's still a senior creditor above you, that causes an implication, right? So by paying it off, the 70, 80 million, it came from 6th Street themselves. They basically jumped JPM right out of the picture, freed baby, so to speak, and obviously became in complete control of the entire process from here to there.
Absolutely.
Beautifully said, fellas. All right, we'll go ahead and start bringing the show to a close. Jake2B, man, let's get some closing thoughts on the way out. 590 people tuning in. What would you like them to know at home, man? And also, wow, what an excellent fucking timeline. Cannot wait to read that DD on paper, man.
Can't wait.
Yeah, give us some closing thoughts, man. Wow.
Thank you, guys. I really appreciate it. I really appreciate the positive feedback. My next post after the NOL will be arguing with everybody in the NOL. After that, it's going to be the timeline. After that, it's going to to be part 3 of the Ryan Cohen series, which ties in all the lenders and who's involved with the dip and their relationships and their interconnectedness, and why he's being also some new info on why he's being sued by those couple towns. I really appreciate everybody's insight. It's great chatting with folks that are interested in the same thing. I feel great. Honestly, I've said this as each day, as time goes on, as more information sheds and comes into the light, I just feel more and more positive about this. I think it's just a really well executed thing. At the end of the day, the thing that keeps me going whenever I doubt anything is Holly Etlin. She in court made very clear when she was being challenged by Andrew Glenn, her reputation means a lot to her.
Yeah.
And then hearing her say, there's a story to be told here, but it's not mine to tell, that I think that was so well said, using such a nice wording, that it basically sealed the fate for me personally. I feel great about it. And I was also very surprised to learn through the American Airlines bankruptcy post that I made that Holly Etlin may be the plan administrator. Because the chief restructuring officer in that case was the person that was appointed as the plan administrator.
Okay.
Funny, he works for Andrew Glenn with his firm now, and he joined Andrew Glenn for the ad hoc committee of bondholders. Holly's, I'm good being in Holly's hands. I feel good.
Cool. All right. You heard it from Jake2B, man. Appreciate having you on the show. Chat, let's get some fucking love, man, on his way out. Wow. What an excellent piece of DD tonight. All right.
Thank
Take
you.
care, Jake.
Appreciate it. Have a great night, eh? Thank you so
All right.
much.
Jake.
All right. See you, man.